Yeah, good evening, all traders out there, and welcome to the session. So let's start with Nifty. So I'll go to my platform. See, as a trader, you always wonder that after a move up, gap up, why does market again take a pause? Right. So we are going to analyze today's market on basis of what are the indicators or what's the study which is more relevant, which is going to give us a clear picture as to what to expect. So before the start of the session, let me read out the disclaimer. This is for educational and informational purpose only, and it does not constitute financial advice. So that's our plan sheet, which is for today, 9th of February. See the trend of both Nifty and Bank Nifty. First, we are going to focus on the Nifty is up. But at the same time, when there is a substantial move up in price like we have seen recently, a up move makes it overbought on the daily time frame. So how to measure overbought? Let's go and check it on a platform. The tool which we use on the technical side is Bollinger Bands. It's a measure of mean and a standard deviation. So on the Bollinger Band, if you see, this is the middle band. Once prices comes and reach around the upper end of the band, it does get tired a bit. If let's go and check on the previous few occasions, this is where prices hit the upper band and you had a bit of a cool off and a consolidation. Again, you had prices hitting the Bollinger band on the upside. You had bit of a cool off and a consolidation. Again, prices hit the band on the upside. So Bollinger band on the daily time frame chart after a sharp up move, if it touches at or around the upper end of the band, prices are considered to be overbought. Overbought means it stalls the further up move in price. There could be a secondary reaction, a minor dip. Before, let's see what's the next move going to be. So right now, in the current market situation is that price gapped up. We had seen yesterday this is a consolidation which we considered as a bullish consolidation, a sort of a flag. Once it gives a breakout, we did see some upside. And yesterday's candle also, what we had analyzed was on Friday is it was a hammer, and typically a hammer coming around the middle band does suggest that there might be an uptick. So Nifty current trend is up, but it's overbought. Today's candle pattern, if you see market after gapping up, it moved in a very narrow range. Resistance is coming to around 26,000. So where did we get this figure of 26,000? Again, I take you back to the price charts. The upper Bollinger Band, which is two standard deviation from the middle, which is also a overbought zone, it is showing at 26038. That's the upper band. And since we have also the OI distribution showing around 26. So I've taken a round figure of 26, where the immediate resistance for the market is for tomorrow's trading. And support is 25,700. Why 25,700? See, whenever prices gaps up, okay, the start of the gap itself becomes our support. So that is we have taken 25,700. Till this gap is not closed itself, this will act as a resistance. And if I want to mark a zone for my short-term trading, I take this entire gap and create a zone. This is going to be my support zone. So as far as market is concerned, it's very clear that for a day, uh, it's very defined in a range. The range is very clear based on today's gap up, which is yesterday's high, and the upper Bollinger Band. So this is going to be the range for tomorrow. So traders can plan out their trades in between. And the technical study right now which we are using to mark the resistance is Bollinger Bands. And as we said, as a trader, the choppiness of the intraday volatility comes in from the options data also, where the support is, where the resistance is in context of the OI buildup. So after studying price action, always get into the habit of studying the options data. So I'll go to the options. So I'll use my Stocko Insta Money, Insta options, Stocko Incred Money, Insta options. There it is, it's open. So let's go and check on Nifty. And today it was Monday. So tomorrow you are going to see the weekly expiry on 10th. And I'll go to my trending OI. Then you have OI statistics. So if you are using the Insta option, this is the what I would call the hierarchy of studies which you follow one after the other. So first I go to OI statistics. See at ATM, if you see there are 74.52 lakh calls and 76.68 lakh puts. So this typically represents the straddle trade. Okay, I would more or less a short straddle. Above this, open interest buildup is in 25.9. Then you have a big tower at 25,600. So for tomorrow, 25.9 to 26 is going to be the resistance level for the markets, and we have closed at 25,867, which says that if this level is crossed, we can see some uptick in prices. So keep a watch on 25.9 and 25.6. More or less, it looks it's going. The tall towers in the call options belong to the sellers. Remember that. So that's how we have fixed the resistance for tomorrow, which is approximately 137 points from today's close. Looks to be strong as of now. And if you want to see the OI change, see, we are doing these sessions and preparing a plan for the next day. You can have the same in the live market, just change it to OI change. And you can see the real time changes which are happening in the options. Okay. So live OI change is also something, if you are a very, very active trader on an intraday basis, you should keep a watch on it. So that's how 26 we got. So based on the current price, if you see there's a big tower out there which represents the OI buildup in the put option, which is at 25,800, which is like 67, 67 points below the current close. So the range is very tight for the tomorrow. It's 25.8 and 25.9. Whichever side it break, you'll see that 50 or 100 points move which you want as a day trader. Either on either of the side. If 25.8 breaks, there is a dip. If 25.6 breaks, there is a spike on the upside. So that's how we interpret the OI distribution part in the call option as well as put options if I'm making a plan for the next day. And the PCR is 1.06. What does it mean? Which means there is more open interest in put. Traders have sold more puts than call. The OI is high in put options. And the straddle price is 137, which is also suggesting a reduction in volatility. Right from when we started this session was on budget day. If you remember, yeah, IVs were high on the budget day ahead of the event, no doubt about it. But if you are following our sessions, at that date was 445. From there, it has dropped down to 137. And that's quite typical. I've seen on expiry days, it ranges between 30 to around 50 or 60. Let's put it a range of 30 to 130 to 160. So that's the straddle price. If you're asking how we come to the straddle price, the calculation part of it, you don't have to calculate. Go to the option chain. Straddle price means the the premium in ATM call and ATM put make the total. So here it is ATM is 25,850, total is 71 plus 65. That's from where we got a figure. So that's what again is showing a narrow range. Let's see which side it breaks based on the OI buildup. So keep a watch on those levels. And market will remain choppy within this 300 points range uh, based on and if I add this, you can see which side is going to break tomorrow. So 137 points movement based on current close is likely, but more or less a sideways because OI buildup is there in ATM as well as just next strike price is like 100 points above and below. So that's put markets as a choppy. So hi Yash. Hi. So now let's go to Bank Nifty. On the Bank Nifty part, again, I'll go to my platform, which is the Stocko Incred Money platform. Bank Nifty is showing, let me add the simple Nifty Bank. Yes, I got it. So Nifty Bank, if you see, is just trading sideways. See, this was an event day, lots of announcement came, so there was a huge gap up, but ultimately it cool off. So Bank Nifty is also at or around the overbought as far as daily Bollinger Bands are concerned. So market looks stretched at the current points, but at the same time, as a day trader, I focus on my intraday charts to take my trades. This is a broad plan which we are preparing, which says us what's the likely movement tomorrow. So Bank Nifty is also overbought at or around the current price. Can the overbought keep on stretching it too far? See, right from here, the band has started expanding, no doubt about it. So, and this was a hammer. So, if you are asking what's the range, take this hammer as your support level for Nifty and sorry, Bank Nifty. Excuse me, I'm having some cough. It's a cold out there. Yeah. See, gaps always act as a support. Remember that. Intraday choppiness or intraday dips or declines, gap do provides the support. And on the upside, so right now we don't have any reference point on Nifty till this open. So that day what we saw straight at the open, the market did encounter selling pressure. So that's how I would put it, Bank Nifty's range. But no doubt it is overbought at the current price. So let's go and make the plan for Bank Nifty also. So the trend is up, but it's overbought, which means market looks tight at the current levels. The gap up event today just took a shape of a very narrow range candle in which markets consolidated and didn't give any meaningful moves for intraday traders. So that's where the narrow range coming in because the trend is up and it's getting overbought. On the resistance side, we have taken 61,400. That was the tariff deal day open. I'm not taking the high, I've taken the open. That's where it opened and currently cool off. Support we are taking at 60,385. So where did we get these figures? 60,385 is the start of this gap. Right? I have taken this entire gap over here. Right? 385. So this gap I've taken, it can push down a bit if there's a bad day on from intraday perspective. And the resistance, I've not taken this high as a first one, I've taken this open. Why I've taken this open is that on the tariff news announcement day post up 2 days after the budget, we saw market gap up strongly, and that was the open and it cooled off. So broadly, again, you can see in Bank Nifty, if you have defined the range and you have to trade the volatility, it's approximately 1200 points and quite obvious. So that's Bank Nifty. And the technical study right now, which is relevant and which you're using, is Bollinger Bands. Remember that. Always highlight which is the study which has decision making or currently is Bollinger Bands. Earlier, we were using moving averages when markets were trading tight or close around to those moving averages. Now it has moved up. So the moving averages which we were using, let's say for the last 3 to 4 days, will now act as a support levels. On the P side, the Y buildup is in put is at 60,500, call is at 61,000. Let's go and check it out. So I'll go to Insta options, which is Stocko Incred Money Insta options. I'll go to Bank Nifty and I'll go to OI statistics. In OI statistics, I can clearly see this. So the dash in the middle is 60,700, which is your ATM at the money. And at the money also, the call is 3.86 lakhs, put is 3.26 lakhs. But we just focus shade above and below to figure out where the OI buildup is in call. And 61,000, the OI buildup is going to act as a resistance, which is 370 points from the current levels. If OI gets taken out, then you look for the next strike. And based on the current, I would go on the put side, it's 60,500. If that gets breached, there is no substantial OI build-up anywhere below that. So that you'll have to track it on this platform on the live basis. So that's how we have taken 60,500. If that breaks, you can see dip towards the gap area, or I would put this another 100 points. Why? We'll have to check the Y build up at that point of time, because the next strike price in Bank Nifty is 100 points below. And on the PCR side, which is a put call ratio, OI buildup in put is a shade higher than call. So it's 1.30 is in puts, 1.28 is in calls. So the call writers are more active compared to put items. That does suggest that intraday, if you have choppiness or some dips, markets are likely to encounter supports, and watch out for the levels which we have mentioned. And again, to check the straddle price, which means we take the at the money call and the put and add both the premium. So the closing is 60,669, and at the money then will be 60,700. It get highlighted, so you don't have to figure out. So 530 is the premium in call, 522 is the premium in put. If I add together, I get 1,030 and 22, 1,052. So the 1,052 or 50 I've taken round is the straddle price. And if you see somewhere here, that's the range which is coming out, 12 to 300 points. Just now when we check in between the support and the resistance. So as a trader, I'm aware of my price charts and I'm aware of my option data. And Nifty, Bank Nifty, I would put it volatile. Why? Because it has touched the upper end of the band, Bollinger Band, which is overbought. And let's quickly review gold. So I'll go to MCX gold. Yeah, give me a minute. That. So I'll go to futures. I'll go to gold and gold futures. So gold, as we had carried out, if you saw on the technical note, this is going to act as a resistance as far as gold is concerned. Okay. So gold did find resistance there. And after you see such a sharp dip, see, the first pullback is always a strong one. Remember that. After that, it goes in for a consolidation. And the consolidation which you measure is that it's in context of retracement. You take the high, take the low, mark the 50 to 62% retracement level. That's levels what we use as a trader is any pullback goes up to this level, which is 50 to 62%. So for gold, it will be somewhere around 1,59,571 and 1,64,301. This is where the spikes in the golds will get resistance at. Right? So that's where the resistance in the gold is. And on the downside, see, still it has not made a high above this high. So till it's not make a high above this high, the last low is your support only from the day trading perspective and not beyond that. So let's take this and then we can go to the hourly charts. So once we go to the hourly charts, I don't want the daily Bollinger Bands out there. So again, I come back. So gold, I would now got a support for gold on the daily time frame. Some goof up happened. Let me leave on the gold chart. Again, I'll come back. It was just some, yeah, trading view chart is getting loaded. I'll just change it to gold. Yeah, that's gold. On MCX we are analyzing. So as a day trader, I focus on 60 minutes given the volatility, or on 50 minutes is volatility is not there. So my retracement is very, very well defined and my support is well defined. So gold more or less is likely to remain in between this range, and this is the high from where it fell. So only once it takes out these levels, then only further uptake in gold as a day trader you can expect. Or else more or less the zones on the golds are fixed. So which is 1,67,60,703 and on the dips, likely to remain in between. So you can plan out based on levels or studies. Or we had also done the session on how to trade gold on and silver intraday on basis as momentum traders. So what are the momentum studies? If you are not aware of it, I'll just tell you, spend some time, watch the sessions we had done specifically day trading momentum on gold and silver. So I'll take you to the YouTube channel. So there you can see a complete session I have done on how to trade golds and silver as a momentum trade on intraday basis. So you go to the video sections. In the video section, you will find it over here. Momentum trading, gold and silver. So we have discussed a momentum strategy and a momentum setup and how to create that setup based on 15 and 60 minutes time frame. So broadly, we have defined the goals, figure out the retracement levels. You can fine tune based on your learnings on the webinar on momentum trading, gold and silver. So let me come back to our plan. Yeah. So that's what the plan looks like for tomorrow. Both in Nifty as well as Bank Nifty is like the put side is more than the call. So PCR is slightly shade above 1. Intraday choppiness is there, and follow your levels. So before I end, I'll read out the disclaimer. So this is for educational and informational purpose only and does not constitute financial advice. Thanks, friends. Have a nice day. And you can plan on the same basis the studies which you're using for the stocks you're trading or other indices you're trading or any of the FNO stocks you're trading. Thanks. Have a nice day. We'll again meet tomorrow at 8:45. This sessions we are doing post market, which is at 3:45, and before market open also we review where we stand in context of global markets. Right? Thanks. Have a nice day, everybody.